We all watch the financial news networks, right? Well, how many times have you heard someone say in effect that no one could have predicted oil's record price rise? The truth is, we saw it coming and we've been writing about it for over a decade. It's a great story that illustrates the market insight that the wave principle has to offer. This is a long-term chart of oil's average annual price. It dates from 1859, the year the first commercial oil well was drilled in the U.S., to 1998. At the end of 1998, oil prices were hovering just above $10 a barrel, and I think it's safe to say that $40 oil, much less $100 oil, wasn't on anyone's radar screen just yet. From this chart, we were able to forecast a new historical high, but we couldn't have done it without the benefit of the wave principle. Traditional or conventional wisdom would have you believe that markets are random and that they are driven solely by fundamentals. Well, that's not the case. Markets are patterned, and investor psychology plays a huge role in those patterns. About 70 years ago, R. Elliott identified those patterns. They occur with great regularity, and there's a long history of people who have been able to successfully apply them to forecast markets. Here's a chart we published in Global Market Perspective in 1998. One of the 13 patterns that Elliott described was a triangle. Triangles always occur as the next to last wave in a sequence, and it's the key to our successful call in oil. Our working assumption is that the 74-year-long triangle between 1859 and 1933 is supercycle wave 4, so a supercycle wave 5 advance should unfold. When this chart was published, cycle waves 1, 2, and 3 were done, and the hunt was on for the cycle wave 4 low. From there, we knew with a high degree of confidence that it would only be a matter of time until the record books were rewritten. And here we are 9 years later, nearly 10 times higher in 75 years into the super cycle wave 5 advance. From the cycle wave 4 low, we've tracked the final wave, cycle wave 5, from its inception and through a number of momentous events like 9/11, the Iraqi invasion, Hurricanes Katrina and Rita, and the currently escalating Iranian nuclear situation. We've missed a few twists and turns along the way to be sure, but the constant theme throughout was that higher highs were still ahead. Now that oil is deemed to be expensive, and dare I say scarce, the question on everybody's mind is, where will it go from here?